Hello everyone, my name is Deepak and today with me is Rajiv Awasthi. Rajiv Awasthi will be joining us at the Wealth Summit. He is our real estate agent and his office is in Pleasanton, but he also has multiple offices throughout the Bay Area. So I wanted to introduce Rajiv to all of you and ask Rajiv some questions about real estate because people always want to invest in real estate. It's probably one of the best ways to build wealth. At least I see it that way. There are many other ways to do it, but I think real estate is definitely one of the best ways. So I'll talk to Rajiv a little bit about that today, and then over the next couple of months. So as all of you guys know, that Wealth Summit is coming up on November 10th. Normally it's in December, but this year we decided to do it a little bit early. That way, some of you guys who wants to execute a particular tax strategy or finance strategy, you have enough time to get that done before the end of the year. So that's why we're doing it on November 10th. If you haven't booked the tickets, please go to sanjeevcpa.com and get your tickets today. And if you have a spouse, if you have a friend, especially daughters, I would strongly encourage you to bring them to the Wealth Summit as well. I want to see more presence of women because I think they they manage so much but they don't show up to these events. And many times when I'm doing consultation and something goes wrong, it's the mostly it's the women that is suffering. So we would like to avoid that as much as possible. So if you can bring them along, that would be awesome. So enough about the Wealth Summit. So Rajiv, if you don't mind, maybe spend some time, introduce yourself to people, and I have a couple of questions for you.
Perfect. Well, thank you, Deepak. I first of all want to say hello to your audience. I am a real estate broker associate with Intero Real Estate Services. I have been practicing real estate for about 23 years now in the Bay Area. Lived in Bay Area for over 33 years. So very familiar with the landscape and the real estate part of it. Being involved with the community for a long, long time. What I like to work with or specialize in is first-time buyers. Especially, there's a lot of our first-time buyers that come in and they need a lot of hand-holding, a lot of questions. Um, I'm there. I'm very patiently answering the questions and guiding them and communicating with them and the other side to kind of make their dreams come true. I also work a lot with investors. That has been a key part of my um, portfolio in terms of helping out the investors as well. Real estate, as you rightly pointed out, is one of the better ways, for investing in and creating wealth over generations. And buying a home is the first step, Deepak. But I also feel that once you have a home, then what's next? Stock options are great, but I think real estate investments are amazing as well because there's several benefits. You can do a 1031 exchange by selling it and buying something else bigger, increasing your portfolio and not paying a single dime of capital gains tax, getting cash flow while you own the property through depreciation and through rents. So there's a lot of good ways. And I have to thank Sanjeev Gupta ji and you for involving me and my company. We were there last year, and it was just amazing to meet so many people at the Wealth Summit. And I think it was a very um, dedicated, you know, platform, so to speak, because everybody is out there to get information, whether it's financial, with a CPA, financial advisors, or with real estate or lending. I think you're doing a great job in putting these events together, and I'm super excited to be part of that on November 10th as well.
Yeah, and by the way, those of you guys who were part of last year Wealth Summit, Rajiv had so many prizes to give away, and that was a lot of fun. I think all the way till the end of the event, people were looking forward to that big TV, yeah, you were giving away, and that was just wonderful. So thank you so much. So Rajiv, real estate, where do you see our market is right now? So oftentimes people think, well, Bay Area is in a bubble because prices are just way too high now.
Yeah.
And funny thing is, many times I hear that from people making 700, $800,000 a year. So, it's like two times your salary. So, which is quite surprising because, a typical person who's working maybe a regular job, making, let's say $100,000, for them, it's a 15x their
Mhm.
salary. So, what do you think the current state of market is?
Well, great question. I just have to point out that real estate worldwide has appreciated. It's not just United States, and particularly in the Bay Area. Bay Area, the prices go up exponentially because of the cost of living index, and which also involves better salaries for most people living here versus other parts of the country, right? Um, the bubble is a favorite topic of conversation for a lot of people that I come across who also ask the same question. I think the last bubble that we had was in 2008 to 2010 when the whole economy was, in shatters. And a lot of people were unemployed and a lot of businesses closed. That was one of the great depressions of our lifetime, so to speak. I'm not sure if we're ever going to see it again in our lifetime. But in terms of the graphs, when you look at real estate, you look at long term. You don't look at a year past or a year in front or two or four. You look at the last 50 years, and those graphs are easily available online. You'll see that there's always a growth, then a stabilizing timeline, and then maybe it dips a little bit. But I always tell people, look, if you go up 5 steps and you come down 2 steps, you're still 3 steps ahead. So that is in terms of the pricing. Yes, granted, a lot of first-time buyers do face that question or the anxiety of whether they would be able to afford to buy in the Bay Area. While immediate Bay Area, it is what it is. I don't see the prices going down, um, as much as people would want them to, or a bubble to be burst. I don't think so. Look at the economy. Look at the stock market. Look at the confidence of the consumers. Look at the inflation rates. And here we are talking about maybe the Fed's reducing the interest rates starting September through December, which will spur a lot of real estate activity. But I tell people always look at the 10-year Treasury yield, and that is a good indicator for the interest rates. I mean, I'll just throw out a number right now for a 1.2, $1.4 million purchase. You could get, or even higher for that matter, interest rates hovering around, 6.5 to maybe 6.4, 6.5, something like that. And they've come down over the last year or so. I mean, we have experienced, as you know, Deepak, uh, in 2022, May, when these rates started going up because we were out of control in our inflation, rates went up in a rush from literally 3% to 6%, and then hovered around 7.25% for a long time. People still bought. There are creative ways to finance. I just want to let people know that this is where I come in through my resources, which I built up over a period of years that I've been doing real estate. We have a good group of lenders that I can, you know, associate the potential buyers with that. Also want to let people know that, take advantage of a lot of these propositions. People may not be aware. If somebody is over 55 years of age, either them or their spouse, and they own a property, for a long time, they can literally sell that and buy another property even at a higher price and still keep their property tax basis and transfer them, right? So those are some of the few things, in terms of providing resource to a client. But I don't think the real estate market is in a bubble over here. I think we're still short on inventory as of today. There's literally, if there was no more home that came on in the entire Bay Area, we would be able to wipe that out in 3 months' time. So when the inventory levels increase, let's say they go enough where the home, let's say 6 months of inventory, then it become a buyer's market. But otherwise, I think we're still in a seller's market right now.
And to add to that, Rajiv, last month I was in Colorado, and as you know, I spent many years in Bay Area. Now I'm in Texas, enjoying the hot weather here. Um, and For so many years, I thought real estate market in Bay Area is just crazy, and it will remain crazy just because of the environment that Bay Area has. But I think that was because I was just in Bay Area. I didn't really travel that much. But now that I'm out of Bay Area and I travel quite a bit, I go to Washington, New York, New Jersey, and more importantly, before I had all the clients from Bay Area. Now I have clients from all over the place.
Right.
So, just my business has evolved after moving to Texas as well. And I'm telling you all this is because when I was in Colorado, there was some of these places I went to, 2-bedroom home, not even a home, like an apartment, like 800 square foot, 900 square foot apartment, were going for $2 million. And I'm like, oh my God, Bay Area is so much better. Uh, I spoke with a client from Seattle, and he had some capital gain problems. 3-bedroom property in Seattle, $1.5 million.
Right.
So and that's why I say that a lot of time, because we're in Bay Area, we just think Bay Area is in bubble. But if you really compare it with other metropolitans out there, you'll be quite surprised. Now, for example, a lot of people think Austin is cheap. You go to Dallas right now, you go to Plano, Frisco, any of these great markets, for example, you're not going to find a home for less than $1 million in a good place, like a good home, like 3,000 square foot home. I guess
Sure.
compared to Bay Area, it's probably still better. But
Yeah.
still, for Texas, is a few years ago, you can get that for like $400,000. So market is changed quite a bit actually in that last 2-3 years. And that brings up another question for you. Now I think for the most part, people know that interest rates will be coming down. I think that's a very easy prediction anybody can make at this point, right?
Right.
So do you think that is already priced into market? Like people have kind of already raised the price because they know the interest rate's going to come down? Or do you think once the rates come up, prices will actually go even higher because there'll be more demand? Where do you see it?
Well, great question. So, I find a lot of times that agents tend to overprice the homes because the sellers think their home is worth much more, where in reality it may not be. And those homes sit on the market a little longer, or maybe get canceled, those listings. Whereas other homes, maybe on the same street, might be priced at the market value and it sells pretty fast. So that is something that people should be very aware of, is to look at the comps. I mean, Zillow's estimates and Redfin estimates are one thing because they're based on algorithms, but they haven't really seen the property from inside and they haven't worked with a professional agent
Correct.
to figure it out. But in terms of the interest rate cuts, what is being priced in, and which typically does, is from the lender side. When you see the interest rates come down, I mean, I was talking about 10-year Treasury yield. Uh, as the bonds are rallying, as the 10-year Treasury comes down, and then interest rates, mortgage rates become lower, right? So I see that because in anticipation of the Feds cutting the interest rates starting September, I think it's almost 90% chance that they will do that. Maybe closer to it would be 100%. Um, the lenders start pricing their mortgage portfolio based on that in anticipation. Now, from a buyer's perspective or mentality, when somebody hears it on the media or TV, interest rates have been cut, and then it hits home, and then they start, running to buy a home, um, or interested or motivated to buy a home. Let's put it that way. So what that does is the inventory levels don't necessarily have to rise. Okay, they may not rise, but the buyer pressure on real estate becomes more immense. So thereby increasing the number of offers and the competitive bids, and increasing in the prices as well. So I don't think most sellers are pricing their homes because of anticipation, because it's not been done yet. So that would be a faulty move on the part of the sellers if they're thinking like that. I think the market is still where it should be today in terms of pricing. There are some deals to be made, and it depends on who you deal with as your representation. That they can maybe make the prices lower, unless the home is super nice and there might be competitive bidding. So I think come September, we're going to start seeing the prices tick up a little bit because, like I said, the inventory levels I think will remain the same, but the pressure on real estate from the buyer side will be a little bit more.
Okay. In a same line of thought, obviously, the consensus is that Feds will continue to cut rates over the next several months. They're not going to come back and say, hey, we're going to reduce by 2% in September, right? It's probably going to happen maybe over 6 months, a year time frame. So interest rates will continue to drop. And I think most people, especially the Desi community, probably already knows that. So how do you see that pricing in? Like, wouldn't be people were like, let me, the cycle has already started. Let me just wait another 6 months.
Right. Well, there's always a cost of waiting, whether the market's going down or up. Down when the prices go down, the cost of waiting would be, hey, if you're still renting, why are you paying rent? And when you can buy a property and later refinance, right? The interest rates go down maybe. Same thing here with the interest rates cuts. Like you rightly pointed out, we anticipate over the next year and a half to 2 years, you know, cut maybe every quarter or whenever the Feds meet, depending on how they perceive the economy to be and the inflation rates to be close to where they want it to be. Um, I anticipate between 1 to 2% over the next 12 months rate cuts. Now, what that does is, like I said earlier, inventory levels may not rise, or they may, because now the sellers who are looking to sell their homes say, hey, maybe we can get a good price for a home, and then we have to buy another home, whether downsizing or upsizing. Interest rates are in our favor, so maybe more inventory may come up. But I think the more buyer pressure there is, the prices will continue to go up as the interest rates start falling down. So I would say, look, if you
So Rajiv bhai, so that's a wonderful explanation. We cannot really predict what the future going to look like, and we should take action based on what's available to us today. We saw what happened during COVID time, right? Market kind of dropped for a second, and then boom, real estate market just went. I know many people who were in contracts at that time, and then they all came in. Hey, we want to cancel the contract. What will be the impact on us, and all that kind of stuff. So a lot of people actually got out of contract, and then they were not happy because the market just went boom right afterwards. So I agree with you. Now, those of you guys watching and you want to talk to Rajiv, if you don't mind, maybe give them your phone number, your website. How can they get hold of you?
It's very simple. My website is rajivawasty.com. It's RAJEEBAWASTY, rajivawasty.com. Or my cell phone number is 510-703-7332. I'm available to talk to you or just kind of have a consultation. Or if you want to take it to the next level as a first time buyer, as a move up buyer, as a seller, as an investor, I'm there to guide you.
Okay, and I will also put Rajiv's phone number and his website in the description of the video as well, so that way you guys can easily get hold of Rajiv. Now, we will continue this conversation. I just wanted to connect with Rajiv and introduce him to everyone right now, but we will continue this conversation over the next couple of months, definitely before the Wealth Summit. I want to interview Rajiv a few times. I want to get his take on investments. I want to get to know him about 1031 exchanges. I want to know what's going on in current market, what kind of opportunities are out there. So we're going to be addressing all kind of strategic things related to real estate. Now, if you have a question, concern, topic you want to bring up, just message me through WhatsApp. You guys all have my number, 510-435-7368. Just say, hey, can you please, either connect me with Rajiv or ask a question, and I'll try to ask that to Rajiv directly as well. Now, Rajiv, if people want to just kind of get a listing of what's available in market, what's the easiest way to do that through you guys?
So just either email me, rajivawasty@gmail.com, or call me on my cell phone, 510, or text me, 510-703-7332. Let me get an understanding of what you're trying to achieve, what you're trying to look for. And there are a lot of times we have off-market opportunities or coming soon properties that are not necessarily on multiple listing services and not on Zillow or Redfin. I can provide that kind of additional help there as well.
Okay,
Very
perfect. Perfect. Okay, so thank you, Rajiv bhai. Appreciate it. I know you are traveling soon, so I'll see you once you're back in the state, and we'll have a much more detailed conversation at that time.
absolutely. Thank you, Deepak. I appreciate, and again, a big hello to the audience.
All right, thank you. Bye bye.